Good morning, good evening, wherever the world you're watching from. It's Business Morning, live on Channels Television. I'm Ladi Williams. Let's take a look at what's happening in the news. Still coming from the Article 4 IMF consultation, we see the federal government's gross debt profile is projected to grow by about 92% from 70.85 trillion naira in 2022 to 136.11 trillion naira in 2026. And this is according to the International Monetary Fund. The Washington-based lender made this projection in a report titled Nigeria's Staff Report for the 2021 Article 4 consultation. The fund says the gross debt figures of the federal government and the public sector includes overdrafts from the Central Bank of Nigeria, promissory notes, and AMCON debt. This means debt including ways and means have been factored into the total debt profile of the government. Meanwhile, the Debt Management Office put Nigeria's public debt total at 38 trillion naira as of the end of September 2021. And the House of Representatives Committee on Customs and Excise has approved 3.01 trillion naira as of the 2022 revenue targets for the Nigeria Customs Service. The approval comes after the budget defense session of the Customs, as the committee stated its resolve to change the budget cycle of the agency. The committee also approved 369 billion naira as the 2022 budget for the service. Do take a listen.
We want to change the budget cycle of the Nigeria Customs to fall in line with national budgets. On this note, the Nigeria Customs budget should be ready for mid-November so that we shall work on it and pass it every December before embarking on our Christmas and New Year break. If you notice, it is only Nigeria Customs Service budget that suffers delay into first quarter and even sometimes into second quarter. We want to discourage this trend so that you can perform in the area of capital projects. We equally want to suggest that the CGC and its management team, especially the department saddled with the responsibility of executing the capital project, to implement the capital project in phases. Whatever you collect as your 7% collection and 60% of the 1% CISS meant for the capital project for the year under review should be used.
All right, still looking at the Central Bank of Nigeria's RT200 initiative. We're looking at the workability of this initiative, raising about $200 billion from foreign exchange repatriation. CBN said that it includes a set of policies for non-oil export promotion. All right, now we'll be drilling down on this and other matters in the agric industry. Joining us is the president, Mr. Chukwuwachukwu, President Agric Industrial Entrepreneurs, to tell us more and how the agric sector can, benefit from this lofty initiative. Great to have you, sir. Good morning.
Thank you.
So, looking at this, initiative now, do you think the agric and industrial entrepreneurs, fit into this plan?
Absolutely. It's the only way to go, actually. I mean, everybody in the world knows that agricultural sector creates the most jobs anywhere in the world, and Nigeria is not an exception. The problem has always been not giving impetus to drive the system. There have been so many initiatives by the government, so many programs and projects. I would immediately say it isn't the absence of policy initiatives, the absence of correct policy implementation. There have been so many interventions in this country, so much money has gone into it, but nobody has actually implemented the policy initiatives of the federal government. So you can have policy initiatives.
But looking at this one now, what do you think can actually make this work?
Well, at the Agricultural and Industrial Entrepreneurs of Nigeria, AIEN, we've come up with a situation or a program that, creates agricultural industrial clusters in every local government of Nigeria. We're discussing with development finance institutions at this point. We're talking to deposit money banks, and we're trying to actually partner with some government agencies I was the Director General of the National Directorate for Employment. And we came up with the famous 4 core programs, skills acquisition, programs in agriculture, small-scale enterprises, which is the bedrock of SME development in this country, and special public works. And every other program that has come up is still revolving around that. But see, the problem in this, in our area, is that the federal government is the father of all these agencies. Nobody's monitoring the input-output scenario of what they're doing. And they're competing amongst each other, wasting resources and not achieving much. I applaud the Special Public Program, Works Program of the President, 774, 1,000 Special Public Works engagement of personnel. But is there production there? There's no production. You're taking funds that should be targeted at production, and you're paying people for doing nothing. They're not producing. Now, we on the other hand, advocating, and we'll be meeting with the presidency on this issue. If you put that kind of money into agriculture, into a recyclable funding system, where the money can be actually revolved and recovered, we're going to target production and productivity. Let us say we have a cluster and an advantage, local government whose advantage is cassava. Okay, we're targeting about 500 entrepreneurs. We call them agropreneurs, because the bedrock of any development, and to a large extent developed economy, must necessarily rest on small and medium enterprises and the informal sector. So let's define that.
Because I've seen issues where, the central bank is finding it hard to, get some of these farmers to pay back.
Well, central bank it's wise in their decisions, but I'm not sure they've taken time to re-examine the programs they're putting out there. And I'm not even sure the money is being targeted, is being actually assessed. So we should be asking ourselves the truth. Is the money assessed? We sat down in my organization. We analyzed the programs, the Anchor Borrowers program. What is the workability of it? How much have you recovered? The SMICE program, Small and Medium Enterprise Development, Investment Fund. How much have you put that? How much have you recovered? I'm not criticizing there. Those are laudable initiatives, but it puts stumbling blocks. And everything revolves around collateralization of the loans. But we have come up with a system that can actually guarantee, through the collateral system, guarantee recovery and production and productivity. Insecurity directly linked to production and productivity. Okay? So unless we come back to actually create workable programs, not phantom programs, this all sounds so great. It's all development finance initiative. So if we take, for instance, a cluster in a particular local government whose advantageous product is cassava, there's a dearth of cassava. There's a demand, high demand for cassava. I've discussed with Flour Mills Association, the former MD, vice chairman, told me that they require over 5 million tons of cassava. Now, if you plant around there, you're producing raw materials for cassava users for further processing. A cassava cluster will give rise to secondary processing using the raw materials of that produce starch, gari, ethanol, cassava chips, and stuff like that. And so
all adding to the
agricultural value chain. So we know what to do. We're not doing it. We're not letting the right people do it. And by the way, as Director General of NDES, I did create so many jobs. But I can make a bold statement right here. Government cannot create jobs.
Yeah,
jobs must be a private sector-driven affair. It cannot create jobs. So all this thing, you're injecting money into government to create, it's just going to be money for the boys.
Okay, well, the central bank, announced that raw produce exporters will no longer be eligible for foreign exchange. At this point, instead they're offering rebates to portfolio investors, and they also announced that They would rather give farmers, loans to expand their plantations instead. How do you see that?
Well, I've told you, it isn't the absence of policy initiatives. It's the absence of policy implementation. When you make this great sounding pronouncement, how do you see to it? We'll have a bunch of guys. I've been an operator in the government system. I'm also now in the private sector, and I do know that those things don't work unless you target them. Now, we've given some development finance institutions. We're talking with Bank of Industry. They seem to be buying into the idea. We're talking with some other deposit money banks. They're buying into the idea. We're talking to the presidency. And by the way, a visionary leader like the Director General of Raw Materials Research and Development Council has seen the need to partner with the private sector. So we have an MOU with the raw materials. So we developed, a program called RMBCI, Raw Materials Based Clusters Initiative, because the absence of raw materials has stymied the effect of industrialization in this country. Most of our industries are comatose because they don't have raw materials. Now, imagine a situation where, the industries that are lying comatose because they don't have access to their usual pension to import. Now, basically, you have raw materials. You have tomato cluster that can produce tomatoes. So you have tomato industry, tomato paste industry gaining there. You have flour mills, and we have targeted people from the Northeast who can produce, wheat. All of a sudden, you have less dependency on import and less pressure on the night. Are we thinking about this thing? We talk about import, student. You just can't come out and say, we're canceling, we're banning foreign exchange. This is and so. What is the exchange? What are you giving in return? What targeting are you making to substitute that? So that's what I'm asking them to do that. Don't just go, I'm an economist. But when you come out from economics class, how do you culturalize it? How do you look at it? How do you make it work in the system? Just don't go and give me a textbook definition of economics.
Right. All right, talking about, adding value now, looking at, some of our raw materials and, our farmers, take for instance, there is value added, and what about, do we have a ready market?
Of course you do have it.
And, most of these countries are already producing and adding value. What about competition?
Well, competition, that have been an issue, leads to increased, improved quality. Now, if you check the metrics in this country, the demand-supply gap is huge. The excess demand over supply, well, that is what causes inflation. Whenever you have the excess demand over supply, you have inflation. Now, the point of equilibrium is when demand meets supply, that P1, that's established the P1 price. Anything above that becomes profit. So we're looking at entrepreneurs, the agripreneurs, whose motive is profit. So you give Laddie, I want to take you out of Channels TV. I want to put Laddie as an entrepreneur. So instead of filling one job in Channels TV, which I agree, John Mama is a great guy, but I like to turn Laddie away from becoming an employee to becoming an employer of labor. That is how you create employment. There's no magic to it. That's what I did. So if I arm you with a capital, your problem at this point will be the banks will ask you to go and get your grandmother's clothes to collateralize. If you bring the clothes, the bank said, oh no, she was buried in the wrong clothes. I said, but you told me to bring this. So they're not helping matters. So together, we've got to work out a system where a collateral is adequate, the acceptable collateral. So at AIN, we'll come up with cross-collateralization so that you guarantee each other, but we also have a system where, in an ecosystem that can revolve around there, collateral is there, recovery is there, targeted tracking you have to track the capital injected in the economy. Because if you don't track it, that's diversion. Now, a lot of these financial institutions lose money because they're not tracking, and they don't have the capacity to track the funds. If you don't track the funds, you lose quality. And when you track it, at least you're targeting towards what you want to produce as production and productivity.
All right, and we do have the issue of global inflation,
Yes.
right now, and most of the regulators are looking at hiking rates.
Yes.
This will definitely impact, this sector.
Yeah. So if you hike rates, what causes inflation? Is it not excess demand over
The
supply?
cost of borrowing goes up.
Is not excess demand over supply? Okay, so competition, and the government is not. That's what central banks should be looking at. We're looking at the monetary system, monetary value. What is capital in circulation? Is it producing? You don't just go and arbitrarily set up an interest rate. It must be a function of the macroeconomics in the system. All right? So when you look at inflation, sometimes actually, now you take the 774,000 jobs, 1,000 naira per candidate, per local government, that's 774,000. The effect of that, when you look at what they pay them, 22,000 naira per month, that's about 15 billion naira injected into the capital. And that's a lot of money. That's creating a lot of demand, chasing very limited supply. So inflation will be a consequence of that. But if you target production at the point, inflation can come up a little bit, but when production increases, that means the supply is coming over that demand.
Right.
You get to that point of equilibrium, then the rest is that's how you control inflation. There's no magic to it.
Okay, but what kind of conversations are you having with the presidency and the CBN regarding boosting this industry?
Well, you talk to people who are willing. We're making moves right now. I met with the Minister of Science and Technology because that's his domain. Raw Materials Research and Development Council is parastatal under them. And so we are, together with the Director General and the Ministry, now looking at the system where we target raw materials. Okay, raw material leads to production. And so we're hoping, the minister was very receptive. I am here in Lagos. We're supposed to be meeting with some deposit money banks and to see how we had, when I was national president of NASI, we had a great MD who was MD of First Bank. He bought into the vision. Unfortunately, something went wrong around the collateral system that was supposed to be provided by the state government didn't come. But we have a system that was supposed to be meeting with them this week, and I think the First Bank, I don't want to promote any bank. We're going to be meeting with the group MDs who have vision. Because when you even have these entrepreneurs, okay, working within our established ecosystem, it deepens penetration of banking to the rural areas. It increases agency banking. It advances credit to where it's supposed to go. Now, when you have 500 people in a cluster that we're proposing, earning wages because they cannot earn salary. Salary is a function of the earning scale. So the kind of money, it triggers demand. Because now you have people in the rural areas who are working and earning wages. The effect of earning wages is it triggers demand because then they're going to be, if somebody be eating gari, he wants to eat rice.
Right.
Okay.
More of a domino effect.
Indeed.
There. Okay, well, it's 2022, we're in a pre-election year. How do you see this industry faring? And what kind of policy would you like to see briefly?
A policy is very simple. A target at human beings, production and productivity. Okay, and a hungry man is an angry man. If you're not earning wages,
right,
and you see people, you call them, insurgents, you call them security risks, because they have nothing to do. So we must target full employment. And full employment is created when you have productivity. So that's what I think we should be doing. We should be creating agripreneurs. We should be creating people. Now, secondary process of the primary production is industrialization. We now have somebody who's looking at the value chain, now he has raw materials in the value chain to become employer of labor himself. And by the way, we've talked to off buyers, so they're ready. Now, within this system, if our brothers, if our people in CBN will understand it, You now see that we're producing for domestic consumption. We're producing for raw materials production, for further processing. We're also producing for export. China, United States, they're all eager to buy as much soybean as you want. We'll talk to people, they're asking for us for some peanuts from the northern part of the northwestern part of Nigeria.
Yeah.
Okay.
So we're ready to add value.
They add value.
All over this.
So you can earn foreign exchange. Why are we so dependent on oil? When you have more people earning foreign exchange, it will reduce the pressure on the naira, and the exchange rate mechanism will fall by itself.
Right. It all, you know, the plans look quite simple, but it all boils down to
There's no magic to it.
But it can be done. All right, Mr. Chukwuwachukwu, thank you so much, President, Agric and Industrial Entrepreneurs of Nigeria. Thank you so much for coming on the program today.
You're very welcome. Thank you.
All right, so after the break, commodities market update is next. Do stay with us. This is Business Morning. Welcome back now for commodities market update. We see Brent crude futures was down about 96, trading at $96 a barrel this morning, down about 29 cents after rising about $2 on Monday. U.S. West Texas Intermediate crude dropped about 36 cents to $95.10 a barrel after gaining $2.36 on the previous day. All right, now let's get the market update now with Dumebi Yeke right here, from Financial Derivatives Company. Great to have you.
Thank you so much. Good morning.
So much, you know, happening with all, but we're having that pullback today, and all eyes seem to be on Ukraine and Russia. What's going on?
No, still the same thing. The tensions are still there, and if anything, it's somewhat escalated. So the expectation is that, you know, that would continue to keep Brent price, you know, very close to the $100 benchmark. But, you know, there's also the fact that supply constraints are also, you know, propping prices up. OPEC hasn't, you know, increased supply substantially. We have the difficulties with the U.S. Oil supply as well. So all of this combined are just, supporting oil prices right now. Even though there was a decline today, the markets are still expecting that oil prices will, still remain very bullish in net term, and that's because of the Russia and Ukraine tensions.
Right, and bringing it back, let's talk about the increasing quota, OPEC increasing
Nigeria's quota.
What's happening there?
Yeah, so basically, OPEC at its last meeting increased Nigeria's quota from 1.68 to 1.7. Now, with that happening, there's a lot of exactly. So there's a lot of skepticism, around that for Nigeria meeting its quota, especially either in the short term or even in the medium term, and that's because Nigeria is really struggling to, produce even up to 1.4 million barrels per day. So that's really a huge problem. So, and the factors affecting that, there's the issue of vandalism and theft. There's the fact that there are a lot of crude equipment that need maintenance or need replacement that have not been able to, and that has not been able to happen, due to underinvestment within the sector. There's also the fact that there are a lot of maintenance issues at the Focados and Bonny Light and the Bonny production, oil production centers, for lack of better words. So basically, all of these things put together are affecting Nigeria's oil production. And where it becomes very tricky is that oil production is where Nigeria makes more money, not even oil prices. If anything, Nigeria imports, refined petroleum products. And there are also issues regarding that as well, because as at today, there are about 11 ships awaiting berth with refined petroleum products, that have not yet even made their way through to the economy or through to the system. So there's that. There's the fact that oil prices are higher. So meaning that the import cost on this is even, is already more compared to what Nigeria will be making in terms of revenue, because we export the crude oil itself, not the refined petroleum products. And that's why we're seeing issues of fuel scarcity. And although there was the issue of, the adulterated, but at the same time, because right now prices are still not reflective of, operating costs. So marketers, even though there's the issue of the adulterated PMS, in circulation, the truth of the matter remains that it's somewhat of an initial market reaction, because they are spending more to import this commodity, and the market price is not reflecting that. So even though they definitely would have some pullback, and by default, we've seen that happen over time. There's artificial scarcity created. Marketers will hurt so that prices can go up. And why this is even very significant is because diesel is selling for about 400,
new high there.
Oh, yes, exactly. So, and that's because that market is deregulated already. So prices are reflective of excuse me.
Sorry.
So prices are reflective of market happenings
realities.
as well.
And we're seeing, in parts of Nigeria, we've seen fuel sell for about 400 naira per liter.
Exactly.
Are we seeing the realities there?
So basically, that's just,
at some point?
with the delay in the fuel subsidy removal, so already, there's the case of underinvestment within the sector. So now investors are more skeptical, about investing in Nigeria's downstream petroleum sector. And now with the fuel scarcity, clearly it just shows that the real price of fuel, because right now the prices are going to be somewhat escalated, so the real prices would be ranging around 300 to about 350 if the government does remove fuel subsidy and allows the market to regulate itself, and allows competitive pricing, allows market prices to reflect the cost of import and cost of operations for various companies involved in the importation of fuel into the country, or selling of fuel, or even drilling whatsoever. So all of these activities, the prices need to be reflected in all of the activities need to be reflected in the price of the commodity.
Right, and we're expecting January's inflation
today,
any day, any moment.
Yeah, today, tomorrow,
now.
Yeah.
What are the expectations here?
We expect commodity prices we expect inflation rather to increase. Our forecast is about 15.86, and why we're doing that is because, or why we're saying that is because all the factors point to another increase in inflation. Let's look at the price of diesel. Starting with that, all the trucks that bring food into various states of the country from the food belt, they are run by diesel, and diesel has increased about 420 per liter. So meaning that their transport cost has already increased, distribution cost is higher, logistics cost is higher, and they will definitely pass the burden down to consumers in form of higher prices. So that's one aspect. Number two, global commodity prices are higher. Nigeria is a net importer of so many commodities that we make use of in the country. And, the more we import, the more our import, bill is going to be. And all of this is also going to be reflected in commodity prices. And let's not forget the exchange rate pass-through effect to commodity prices as well. So there are so many things affecting commodity prices, and all of this will continue to keep prices high.
Right, and also I see that the International Monetary Fund has warned that Nigeria's decade-long rise in public debt, could create both a financial as well as a revenue squeeze for the economy. Quite a grim projection there.
Yes, it's pretty worrisome. When we look at the numbers, this is about $92 billion we're looking at, and it's a very scary scenario because if we do that, if we discount that amongst all of us in Nigeria, it means that everybody has some level of debt to pay.
I think the last surge, yeah.
Yes, exactly. So all of us have some level of debt to pay, and
unfortunately,
was
it about 200,000 per person?
Exactly. And now imagine a situation where the average person is not even living up to $1 per day, and now they're telling you that you have a debt incurred not by yourself, that you even have to pay for. So what this clearly signifies or signals is that the government is going to still be more aggressive in trying to generate revenue, and that's because its major source of revenue is currently being disrupted, and that's oil production. So the government, if you notice, from December last year to January this year, and even beginning of February, we've seen a spree of new taxes coming up. The FIRS has said they're going to do this. They're going to tax bonds and the income from bonds and other short-term securities. We've seen that there's now the sugar tax, the digital tax. So the government is basically trying to increase its revenue base from on a fiscal level. Now that's by increasing taxes, but the unfortunate scenario, the unfortunate thing is that businesses are already struggling to come back. And right now, there's this squeeze, the squeezing revenue. So, and the big thing about this is that it's going to come back to the consumer. So imagine a company that's trying to stay afloat, already paying a CIT of about 30%. There's VAT of 7.5%. There's digital tax of about 6%. There's so there's so many taxes that these companies will have to pay for. And remember, there are other, factors that already hamper production, because they probably will have to import some of their raw materials because of shortages within the country. So what we'll likely see is possible layoffs or salary cuts. So disposable income is going to decline further. And if disposable income declines, demand and consumption is also going to decline. So even though on a fiscal level, the government is trying to, increase its revenue, because of the fact that demand is not being pushed up, the net effect is not going to, generally have a significant impact on the economy, because demand, investment and consumption levels are significantly low.
It's quite a worrying
yes,
picture
it is.
painted there.
It is.
But, we had the unveiling of the rice pyramids recently, but for some reason we're seeing the price of rice still up. And,
yes.
But I don't think we expected it to drop immediately. We didn't, right?
Well, not exactly, but, the fact is that there have been so many schemes to geared towards boosting rice production in the country, local production of rice in the country. We've seen some pullback on the side of demand, and that's because of the quality of the rice. People still prefer to either buy basmati rice, or at least when you get to the market, you ID marketer is there for rice.
Exactly.
Some of them will not even answer you. They just say, hey, you can take this one, or you can take this one. That's because of the quality of the rice. But nonetheless, the truth is that the rice pyramids, what happened with it is that the rice that was milled, was just somewhat for show, basically. So what has happened is that the refined or the finished product hasn't yet gotten into the market completely, and that's
more like a statement, some kind of statement.
Exactly, just somewhat of statement trying to say something is happening. But really, we don't just want a statement right now. We need an increase in supply of rice to beat down price and satisfy local demand of rice within the country. So there's a lot of things happening in the commodities space. For rice, that's a major staple for a lot of people. It's like the basic thing for almost every Nigerian home. If you're not eating jollof rice for breakfast, you're eating it as lunch, or then you take rice and stew, or you take fried rice, or you take concussion rice,
or fada
rice. Rice is part of every day. So clearly there's high demand for it, and there's shortage of imported rice in the country already because of the forex restrictions. So all of this put together is going to continue to keep the price of rice as high as it is now.
Right. And I see there's something going on with sugar too. I see there's a war between major producers. What's stoking this war this time?
So basically, Boa Foods released a statement saying that flour mills, has somewhat stopped the sales of sugar, and same as well for Dangote. But when we look at this holistically, the market for sugar is a free market. Everybody has the right to play. Everybody's playing individually, but also on a competitive scale. So, and not only that, there's the imported sugar. Nigeria still imports sugar. So with all of this, put together, you can clearly see that the demand and supply for sugar is not speculative. So there's really no need for anyone creating artificial scarcity in a bid to increase price, because if there's shortage of supply, price will definitely increase because of demand.
Because we cannot afford sugar prices.
We can't afford that, because that there'll be a ripple effect. But clearly, if this escalates, there could be an increase in the price of sugar, and that would eat into or somewhat push the price of other related commodities, because sugar is used as an input material for making of bread, meat pie,
the baking industry
basically. So there's so many things that would be affected if the price of sugar increases. So basically, we are keeping our fingers crossed, hoping that this war doesn't escalate. Yeah.
All right, let's see what's happening with other domestic commodities. I'm seeing mostly unchanged prices here.
Yeah.
It's more Gari. Gary's down, and rice edging up there. What's happening?
So still the same thing. Prices have not changed so much from last month. And that's because demand is still pretty slow. Supply right now is, it's picking up, gradually as the economy rebounds. So we're seeing some activity in that area. But basically, with all the issues that we've mentioned concerning the production, logistics costs, transport costs, we could see some of these prices change, and they're going to increase very soon. And that, based on the fact that there are so many factors affecting, the production and supply of these commodities into the market.
All right, Dumebi, it's obviously not looking so good,
yes, quite
this market, but we're hoping for, better days ahead. Dumebi Yeke, Financial Derivatives Company, so good having you today.
Thank you so much.
All right, we'll take a moment now. All right, let's take a look at what's happening with the market. Aniete, first trading day of the week, it's red. How's it looking for you?
Yes, good morning, Ladi.
Good morning.
The red color of Valentine, let's just be ironic about it.
Right.
That's what the stock market painted on the first trading day of this week, which is the third week of February. And it looks as if February is not having that shine that we saw just last month. All right, so let's get started with the market review here yesterday. So this is how it turned out at the close of Monday's trading session, which is the opening day for this week. It was down in value terms, was down by 75 billion naira, which is about 0.29%, more than 0.25% down in the red for the market, and that has also made the market's benchmark all-share index to recede further, almost going down to the 46,000 level, which it went into in the month of January. So in terms of sectoral performance, we saw banking sector was up, and despite the losses that we saw from GT Bank, and then some other industrial goods components, as well as insurance sector components. Mind you, the losses that we saw yesterday was largely due to Airtel Africa, Boer Foods, Lafarge, Oando, NGX Group. So, as well as some other equities, which recorded some profit-taking by investors. But this is how the market turned out in terms of sectoral performance. But when you take a look at the activity chart, it was all in the green. Value was up by 8.52%. Value was up 29.52%, while the number of deals was up by 14.34%. So now, to give us more insight into what happened in Tuesday's session, and then, of course, what to look out for in today's trading session, let's talk to a stockbroker, David Adorin, who's a stockbroker at High Cap Securities Limited. Thank you for joining us, David.
Thank you very much. Always a pleasure being with you.
Quite a long time I spoke with you. Now, David, it looks as if the market is it losing shine? Are investors, are they actually taking profit, or what is happening at the market as we speak?
Yeah, thank you very much. You are absolutely correct, because there is indication of profit taking in the market right now. If you look at the market in terms of its fundamentals, which you just read out, the fundamentals are still quite strong. And if you look at the sentiment report of yesterday, in terms of the number of stocks that advanced compared to those that declined, there was actually equilibrium. The same number advanced, the same number declined, indicating therefore that there is no specific price-sensitive information that is actually influencing the equities market right now. And so we can zero everything around profit taking. And if you look at those stocks whose names you just reeled out, they are high cap stocks. And so any little movement in terms of profit taking in those stocks is capable of setting the direction of the market. And so when there was profit taking in those stocks yesterday, of course, it suppressed the market a little bit. You know, the market is also undergoing a little correction after the massive rally we witnessed in January, which, of course, you know, is not sustainable, because a lot of investors based their judgment on expectations, which in part have already been fulfilled. And so coming to what the market may look like today and then moving to the end of the week, it's not likely that there will be material movement in the market. Although you know that the equities market, in fact, indeed, the capital market as a whole is influenced by both domestic and foreign factors. And we are, in fact, investors and analysts are getting worried about the kind of influence that the rising inflation rate in the U.S. can actually have on Nigeria's capital market. So this is one of the factors that will influence the market. But again, domestically, we are seeing that the crude oil market, which was the equities market, is stable and is still even gathering momentum. And so with these major factors perhaps nullifying themselves, and without any other factor that is capable of changing the direction of the market, we can see a market that will just be stable with slight propensity to advance minimally or decline minimally. But we are in a state of dynamic equilibrium.
Okay. David, I think we're out of time, so I may have to pause a bit for that. But thank you for that analysis of the markets, and definitely we will continue to keep our eyes out for that market, for the equities market. So now flipping over from the bigger securities market, this is how it turned out for the smaller unlisted securities market. It was up by a mild 0.07%. We had lots of gains from the Central Securities Clearing System as well as the NESD. Then the top trades, in terms of value, everything was up. So, Ladi, that's it for the market as it's Tuesday.
Thanks for the analysis, Nita. We'll see how the market plays out, for this week. All right, after the break, we head on to London. That's the moment. Just stay with us. Welcome back. All right, Juliana joins us now. Great to have you, Juliana. Good morning. Well, I see the Bank of England is facing, fierce criticism from both sides, over its plans to raise, raising interest rates and plans for further raise. They're arguing that driving up borrowing costs will have little effect on inflation. Seems quite legit.
Yeah, it's very interesting. But I think all eyes are now, Laddie, on tomorrow, which is Inflation Day. We're going to see the rate of inflation here in the UK for the month of January. In December, it was running at 5.4%, which is the fastest rate in about 32 years. And we know earlier this month, the Bank of England decided to push up interest rates by 0.25%. However, there were some deputy governors that wanted it to rise by 0.5%, so it would be running at 0.75%. I think this argument comes as we just received unemployment data from the Office for National Statistics showing that in the month of January, over 100,000 people entered the labour market. Unemployment still running at a historic low of 4.1%, but a lot of people are entering the labour market not seeing their wages hitting the way they used to. Wage growth is also declining, so there are concerns. We know that inflation is expected to peak by about 7%, and this is even before bills rise in April. So the Bank of England are under pressure, but really ultimately it lies with the government and the strategy that the Treasury want to put forward.
Right. We're also expecting numbers in Nigeria any moment now. But moving to other matters now, see a major buy now, pay later companies, ClearPlay, Klarna, and others have agreed to change potentially unfair and unclear terms and conditions after an intervention from the financial regulator. What are you hearing about this?
Yeah, the UK watchdog has really been cracking down on these buy now, pay later companies that have been doing really well in the UK. I think the biggest one has got to be Klarna. It's a Swedish-based firm, but it's actually got a market capitalisation of £34 billion. I think the allegation and the arguments is that these firms are pushing very young girls who are a lover of fast fashion into a debt. I think there was some sort of survey conducted last year which revealed from Citizens Advice Advice Bureau that 1 in 10 people that use these schemes are running from debt collectors, and also traditional credit card services like Barclays and NatWest. They're concerned because they're losing the customs, so they are asking the watchdog to regulate these industries more. They've done that. They've concluded that some of their terms and conditions were unclear, and they will be refunding some customers some money. But it's a big business here, Laddie.
Quite interesting, and there is a big risk of buying too much and paying too much later. All right, Juliana, thank you so much. Enjoy the rest of your day.
Thank you. Thank you.
All right, let's look at what's happening in other markets. Now we see the crypto market seems to be recovering today. We're seeing a bounce. You know, in that market, we see the market cap there, $1.95 trillion, up about 4.53%. Volume traded $73.16 billion. That's up about 14.39%. Bitcoin dominance sitting at 42.45%. We see price of Bitcoin inching up there, $43,593 at ATM, up about 3.61% at that time. We see a Bitcoin recovering, losses there. It started a fresh move above the 43,000 level, but it has to clear the 43,800 level to stay in bullish territory. Let's look at Ethereum then. I see Ethereum at $3,028, back above $3,000, but not convincingly enough. But it's up 5.72%. Volume traded in Ethereum, $13.21 billion. Top also by market cap, we see BNB there, $423. Had a big move, up 7.63%. Cardano, $1.07, up 3.68%. And Solana also having a big move there. It was below $100, but it's back above. It's up 6.60%. XRP sitting pretty above the 80 cents mark. Let's bring in Rume there now. Hello, Rume. Great to have you.
Good morning, Laddie.
Yes. So I see Apple CEO Tim Cook says he owns cryptocurrency and he's been interested in it for a while. That's quite interesting. I thought he was opposed to crypto.
No, the truth is, all of these guys are the CEO of Apple. He's been very smart, but he's trying to also be careful that he doesn't come out to misrepresent the company, because there are certain things, statements he will make. It will make it sound as if Apple is actually investing in cryptocurrencies, right? So he's making it very clear on his own personal note that he has been studying. This again brings to mind the fact that young or newbies coming into this industry don't want to study. He has been studying when he was asked at the Deal Book Conference. He has been researching it, which means that it has taken a while for him to be convinced, and he had some. So people should look at the market in a certain way that it's not a get-rich-quick scheme. You have to do your due diligence. It's beyond just coming to study various indicators and begin to go all in. You are going to lose money. Why? Because you are in this game to compete with professional traders with years of experience and institutional traders with huge volumes, right? So it is good we take it one step at a time, considering data that actually expose us to demand and supply of the market. I think that is going to be a very good way to be able to gauge the market with those available data, with the market changing.
Yeah, I guess it's not trying to beat the market, but we know traders expect a lot in this market. Break it down for me. Expectations versus what is actually happening right now in the market.
Okay, what is happening right now in the market is a lot of people going in a certain direction, which is actually fueled by emotions, right? So you need to understand certain emotion in this game. These emotions, we as humans, we can't do without all of these emotions, right? There are ways we tame it. That is how we move forward. So, for example, that's why you find out that a lot of people, FOMO, which is the fear of missing out. When the market is high, everybody comes in. So it's also a strategy. When you hear people talking about the market moving, it's also a time to take profit. That's the easiest way, right? When they are very scared, you buy. But away from that, something happened I think on Sunday, which some of us were glued to our TV about. So a lot of people have been having this negative sentiment, bearish sentiment, that the market is going down. Oh, because of the Fed emergency meeting of yesterday. Oh, the CPI is out, 7.5%. The Ukraine-Russia war. Then the market is actually moving with the U.S. stock. Some of these sentiments are valid. But again, you need to understand that on the macro perspective, you need to look in deep, not a short term. Looking at, a month candlestick, weekly candlestick. Then you look at it in a very big picture. You understand that where the volumes are coming in are places where you should pay attention to buy and sell. Like I was saying, this event that was done on Sunday, where at the Sophie Stadium in California, where the Rams actually won in the Super Bowl, right? So there's been a lot of 70,000 people attended. There's been a lot of adverts there, yes, and it pushed people to say, okay, let me even look at these things. Let me even see how it's been going. Maybe you've been hearing about Bitcoin for a while. So that's another set of volume coming. All right. That's another sentiment coming. But it's not enough to quickly jump into the market to get quick profit. Yeah, well, quite interesting times for crypto, Rumor. I must say, everyone is talking about cryptocurrencies, adverts everywhere. We'll see how this industry keeps growing. Thank you so much, Rumor. Thank you very much, lad. It's my pleasure. All right, so that's all we can take for the crypto market right now, and the show. Do join us.